If you're an ADA holder like me, your eyes right now are glued to the Cardano charts because Cardano right now at a very critical area of support. I want to break down this move. What is next for ADA to the upside, to the downside? What is going on? The daily chart, a very important move happening on the daily chart right now. A lot of confluence on all of these charts. All of the charts kind of coming together at a single focal point I want to discuss in this video, even this weekly. And we'll start on the weekly. So hit the subscribe, hit the like button, and let's just dive into these ADA charts. So first thing I just want to point out on the weekly chart is just the very fact that we have 4 days left now of the current weekly candle right here, currently red. We have the 50-week moving average. This is an area of focus for us, right around 41 cents for ADA. And if you just look at this chart, we have the support at the 20, up through the 50, and now we're monitoring for support at the 50. But I just want to really make a note here, because if the 50 fails, for me, that's not any type of bearish confirmation. And I want to explain why. Whether it's a daily chart, a weekly chart, a monthly chart, whatever, the convergence of moving averages in any type of shift, in this case, a cycle shift, are important and healthy. And part of what leads to convergence, in this case, we're looking for the 20-week to cross above the 50-week for a very strong bullish indicator. Part of what leads to that is just the very fact that price starts consolidating between the areas. And if you actually go back to the last time the 20-week crossed above the 50-week, we see a very similar type of move on the weekly. Kind of a few weeks of indecisiveness, up above, back down to the 20, up above, and between the 50 and the 20. So right now, we see ADA did break above the 50-week moving average. And we're talking for the first time throughout this entire bear market. You see this blue line? ADA just was nowhere near it. It's finally there. But falling below that and just kind of bouncing around between those two moving averages, for me, that's not bearish. For me, it actually could be quite bullish. But that might not even happen. 4 days left on the weekly candle. That's one thing that I'll be watching over the course of the next 4 days. One thing to also note is just where we are in terms of momentum. Want to point out still a lot of room to the upside on the weekly RSI, the slower moving momentum oscillator right here, for ADA to continue to the upside. So if we pivot now, though, and we start talking about, well, what's the move that's happening right now? And what am I watching personally in the short term? That's kind of what I want to break down. It's definitely this chart. And if you've been watching any of my recent videos, you know we've been tracking this anyway. And actually, let's take this quick clip from 5 days ago for some context here. Shorter term consolidation, if ADA is going to fall right now, I like to be prepared for these areas. Right now, that support area around 40 cents or so. So that move pretty much happened, right? And I believe after I did the video, we might have had one more swing high right here to the upper trend line area. It failed to really break out. And there's the fall to the lower trend line. So we're getting just typical lower trend line, upper trend line, lower trend line, upper trend line, lower trend line. This channel has actually been going on. This rising channel that we see here, higher highs, higher lows, has been going on since March 12th or so. This is over a month long of a channel. And right now, as I do this video, this area being tested, I'm going to talk about upside and a really strong balance off of this area in just a minute. But one thing I do want to discuss is downside, because this area down here, notice the target to the downside if ADA did break. It's like 34.5, 35 cents, we can call it. 35 cents to the downside if ADA was to break down. Maybe we get a pullback up and it just trickles down and it's very bearish looking. I mean, ultimately, just to give you some context of what a move like that would look like, we're looking at around a 25% move from the swing high. And when we talk about the volatility throughout all of these cycles, whether you're in a bull market or bear market, that's precisely why. Not that that move is definitely going to happen, but those moves can easily happen. And that's in play. And it's a volatile journey to be on, especially mentally. That's why we prepare for these things. At least that's why I sit here and prepare for these things all of the time. But it's the 35 cent area that becomes very interesting to me. And I go back to the weekly and I'll point out one reason why. If we look at where the 20-week moving average is, we just talked about, hey, on this weekly chart, ADA could bounce around between the two. Well, the 20-week moving average is right around 35 cents, just above 35 cents. So a throwback to that area would play out on the weekly to the 20-week moving average, but to a target area on this shorter term chart. And it really doesn't even end there. If we go over here to the daily chart and we look at the 35 cent area, we have the 200-day moving average down here confluent with a higher low Fibonacci support. So the swing low in beginning of March, towards the beginning of March, to swing high, we have this green channel. It's a higher low area. The 618 is right around 36 cents. The 786 right around 33 cents. And right in between there is that 200-day moving average, right around 35 cents or so. So you see just that key area of confluent support on the daily chart here, on the weekly chart at the 20-week moving average, and then on the ADA chart, on the 4-hour chart, it's the target to the downside. That 35-cent area, I'm not saying it's going to play out, but it's just a really intriguing area of gravity that's just begging ADA to test it. But again, it's just a target to downside. Right now, though, on the shorter term, ADA is testing just right now support, the lower trendline support that we talked about in the video from the other day. That's happening now, and we could get a bounce. One thing just to take notice of, if you look at the RSI, even on the 4-hour, we're kind of in this general vicinity where previous swing lows at this lower trend line, ADA was, right? So a reset here on the RSI and a reset here at the lower trend line. And then we have a reset right here on the RSI, and we have a reset right here on the lower trend line. And each time we get this bounce to the upside eventually, right? So is that happening now? A bounce to the upside, kind of start approaching the 50-cent area. So we're talking about support in the 35-cent area at the same exact time that we're discussing the possibility for upside to the 50-cent area. And that could be like this 47 to 50-cent area where ADA is getting ready to break out to the upside, because we do have still in play the flip side of the story, everybody, the bullish continuation story for ADA, a 55-cent target out of this rising channel. And I haven't even discussed the fact that if that were to play out, we have just even larger targets to the upside. We have 70-cent targets, 2 70-cent targets that we've been discussing, the falling wedge. Sometimes I don't even know if it's so worth noting this in every single video, but we have that falling wedge and the inverse head and shoulders. The reason I don't know if it's worth noting every time is just because they're very large patterns, and they take a while to hit the targets if it's going to happen. You can just see the falling wedge. Part of this journey is the fact that it starts back here in like May. That is May. That's almost a year ago, this falling wedge. So it's not like that 70-cent target would hit within even a month, right? So we have the break to the upside, volatile to the downside, another break to the upside. There could be more volatility to the downside. The path to 70 cents is there, but how long that takes is up for grabs. The purpose of this falling wedge isn't so much to say we're definitely going to hit this target in this amount of time. It's to say at this pivot point on the weekly, at this bear to bull pivot point that's happening from a macro perspective, we have structure, we have a formation, and what will play into the pivot of ADA from bear to bull is when targets and price points like 70 cents get hit, and that is a target out of that falling wedge. It just takes a while. Even the inverse head and shoulders takes a while right here. So one thing to note on the daily chart, and then we'll discuss if there is upside for ADA in play on the short term, is just the fact that we did get to break out of the neckline of the inverse head and shoulders. And right now, currently on the daily, testing this neckline area of the inverse head and shoulders. Interestingly enough, a confluent area of support at the 20-day moving average. Look at that 20-day moving average in green, just very confluent with that neckline of the inverse head and shoulders. So all of that being tested right now. I would say on the short term, ADA is at an interesting level, testing this area on the daily, and then testing the lower trend line right here on the 4-hour chart. It's going to be incredibly interesting to see what happens. To the upside, though, it's very much apparent what lies ahead, this upper trend line. If ADA is going to continue to the upside, a bullish breakout, could be a slow breakout, but either way, we're looking at around a 10%, 11% move before we hit true resistance. And I mean really true resistance, that upper trend line, that short-term kind of higher high area, up in this vicinity around 47 cents or so. And you can see this last swing high right around 46 cents. On the way up, what I would be watching on the very short term, if ADA fakes us out maybe, is I'd be watching the swing high back here to the swing low. Maybe ADA makes a move and it's not to the upper trend line, but it's to the shorter term Fibonacci. And we look at a resistance at 45 to 44 cents. So if ADA starts moving and you see it's grooving through 42, maybe even 43 cents, and this is why I track this. So when I open a chart and I see ADA at 43, I don't get like, oh, here we go, ADA's getting ready to move. I wait and I like to see what happens at this lower high area. Again, that resistance 44 to 45 cents for ADA. We get an explosive move through there. I start kind of considering not even this upper trend line acting as resistance. I start considering if we get an explosive move through there, ADA is getting ready to maybe make a breakout. And then I can start visualizing and anticipating that scenario. So these are the targets in play. Not here to predict. I know I say that a lot. I'm just here to track it with you, everybody. And that's all we're doing. And just so that I can just sit back at the end of the day and just know that I'm ready for any move. And that's what I enjoy doing. I'm on this journey from many different perspectives, and watching the charts is definitely one of them. I'm sure a lot of you are probably the same. So hit the subscribe, hit the like. I appreciate all of you for watching my videos. I really genuinely mean that. And I will see you in the next video. God bless.